right, I think we can start already. So everybody, welcome. Thank you so much for joining us this morning. So today we want to thank you first for joining. But before we begin, I just want to remind you that this session will be recorded and will be shared later on. So if you don't want to be on the video, just simply turn off your camera. But it's always good to see you and interact a little bit better. So we encourage you to leave it on. So today we have Oliver. He's the CEO of Imburse. One of the incredible startups that work with us at our innovation garage. So you are at the garage physically.
I am indeed physically.
Yes. Okay, cool. So today we're going to talk a little bit about the importance of taking the first steps to understanding your client and why. So welcome, Oliver.
Somebody's very pumped about the session.
I know. That's good.
Yeah,
all right. Okay. So I'm gonna. Okay. I'm gonna mute. So okay. So sorry. We'll continue. So let me just mute everybody. So I kindly ask you for everybody just to mute themselves. If that's okay. Okay. All right, let me just admit more people. All right. Okay, so like I was saying, welcome Oliver to the Insurtech Breakfast, and the stage is yours.
Perfect. I did actually say to Gabriela, I'm not going to do something with slides, but I actually do have a couple of slides to share with you. And I think today it's really about customer engagement, right? It's all this piece of work that we always try to look at and say, okay, how do we get closer to the customer? And you probably find that every single company you speak to today has the customer at the center. Now, with that, I would ask Gabriela to put me in the center as presenter so I can share my slides. Can you just make me present it, Gabriela? But it is really not that uncommon to go and, within a company and ask us like, what's your priority of the years? Like get closer to the customer. And actually what I find quite interesting through being in the payment space and being actually at very close proximity to the customer engagement topics, which I'll share about just now, is you actually see that you're not actually as close to the customer as you think. You are closer to your understanding your product suite and how you can sell that to a customer, right? So it's a slight nuance, but it comes from sort of the insight that we've had that engaging your customers about operational efficiency and customer engagement. And I will show this sort of throughout the chat. And just a very brief word about us. Imburse is just a sort of a modular middleware, call us a universal adapter that helps companies connect to the payment world so that you can leverage any payment provider, any technology without having to run major integrations, right? Because that often takes long, it's very expensive. And the reason this is important is because as you see, as companies are really putting the customer in the middle, they are spending exorbitant amounts of money on everything from solution modernization, business transformation, product development, all of this stuff to get them closer to the consumer, be better businesses. And according to the Gartner IT spend report, just those three topics is around $600 billion a year across all regions, all companies. But just for insurers in Europe, they spend around 102 billion just on these three topics, just as a percentage of that spend. You have to understand how big that is. And as those who have worked in insurance will know probably why that number is so high is because of the operational problems in the organization that exist. But one thing to really understand is that the problem out there is not really opportunity, it's delivery, right? So you can come up with enough ideas of what to do to get closer to the customer. There are companies that are helping you have ideas, either products or analytics or whatever out there. It's not finding them and coming up with an idea. It's about getting that into the organization that is proving incredibly difficult. Now, when you look at customer experience, right, it is really important to understand what broadly is seen as customer experience. And customer experience is the experience of value. It's an experience. It's not an event, right? And there are three components to customer experience that are broadly viewed. It's the information, value creation, and feeling. So information is just What do you have? What's in your policy? What can I do for you? It's logic. It really drives the logic component. Value creation is the promise. I will pay you out. This is what you get for, right? But the third part, which is often forgotten, is the feeling that arises from this. To give you a practical example, imagine somebody has a motor insurance policy. You are very clear in communicating what product they have, what the when they can claim, and when they claim, you do pay them out. So as a component, you have done your information and value creation bit, but you did it so slow, and it was so many calls, and people were being rude on the phone. So even though you did everything you were supposed to, people were left feeling pretty shitty, right? So this feeling bit is proving to be really a core component of customer experience. And to share with you like a couple of examples, Revolut is one of them. So as you might know, Revolut took a very commoditized product, card. You know, card is nothing that special. Bank accounts, not that special. But they really took the feeling element to the next level. People laughed when they launched metal cards, but it's the small things that really drive the feeling, the way they communicated, the way they designed. It really brought a feeling element that even for the same information and value creation as they would get somewhere else, they were left with a much better feeling. You know, Revolut has grown to one of the big companies of our sort of the last 5 or 8 years, right? In a slightly different sector, McDonald's. So McDonald's, as many of you might have seen, is they've deployed these interesting looking terminals for you to order. Most people think it has to do with just, this came before COVID, so obviously it was a benefit during COVID. But the reason for these terminals is because after doing sort of customer research, they realized McDonald's has two broad kind of customers, those who want fast food and those who are very picky. These are the only two groups that they have, which means that there are people who go to McDonald's to be in and out as quick as possible. They want food and get the hell out of there. But then you have other people who go there and change everything. They'll be like, oh, I want a Big Mac, but I don't want pickles, but I want 2 slices of cheese and I want the 2 meats to not be touching and shit like that, right? It's just these are the two main groups. And these two groups piss each other off in the store. So you will get there. The guy who wants it fast suddenly has the person who is being picky about stuff in front of them, hassling the person who's wanting the choice, this person feeling rushed by everybody who's running in and out of the store, leaving both user groups broadly unhappy. By installing those terminals, that is purely for the in and outs, right? I mean, yes, you can probably pick like no onion or so, but what has happened in the store is that all those who are rushing in and out can use those terminals to order. They're on the side, they pick up the stuff and go, and the people who are very picky are left in peace and have a much better experience. So it has actually increased foot traffic through their stores where they delivered it between 7 and 10%. And you must know what that means for McDonald's, right? And it has increased their sales by around 24%. So what has happened now is both customer groups are really happy. Those who are very picky actually now prefer going to McDonald's than Burger King and those like, because there they are not hassled. They feel much more comfortable going there. And those who want fast also prefer to go there because they know they'll be in and out without being bothered. And again, all of those places give you information, they give you a product, but it's how are you left feeling afterwards? Not everything goes well. There's one example I would like to share that went really badly. It's an insurance company out of South Africa called Outsurance. This happened sort of in 2005, 2006. One of the biggest motor insurance companies in South Africa, one of, if not the biggest, and they were way ahead of their time. They launched Hail Alert, which is in the northern part of South Africa. There they have really big thunderstorms and once or twice a year, very bad hailstorms that really damage the car. And obviously that affects their claims ratios. So they said, we have to be smart about reducing the damage that we have to pay. And what better way to inform our customers so that they get out of the open so that the cars do not get damaged. Great idea, everything. They launched it, big fanfare. And remember, they have many, many policyholders. Here comes the first hail event. They're tracking the weather, doing the data analytics by where the people are, and basically send out an SMS to everybody to be like, hail is coming, please get indoors. Jumping ahead, it tripled the claim amounts because what happened is they had the people's residential address on their system, but it was during a work day and they were all at work and most people were actually out of the hail area. By notifying the people, they saw it as an opportunity to rush home and drove from outside the hail area actually into the hail area. If they just stayed at work, it would have been fine. But because it's also such a big insurer, they have many policyholders who then also told their friends. And it actually resulted in traffic jams in Pretoria and Johannesburg, meaning more cars on average were left outside exposed in the open, resulting in a massive stuff up, as you can imagine. So great information, great intent on value. People left feeling absolutely shit because of the impact it had on the experience. Now they had to claim if they just stayed at work, they wouldn't have, right? So they still covered the damage, but people were left feeling bad. And people shouldn't underestimate how critical the feeling component is. Now the problem is insurance is about a peace of mind topic, right? So insurance is a financial contract between parties. It's money's in, money's out. So in this case, payments is a very core part of that journey. But what is more important is to say, okay, how do you steer this, right? As we saw, information is really good for reason, like, hey, this is what you should know. Value creation is good for action, right? So you do this and then you get that kind of money. The problem is only feeling is completely emotional, which means it's very individual, right? You can do something for me and you do something for Gabriella and you do something for Pietro, the same thing, and we would have completely different feeling reactions to it, which means the problem, as we drill down into it, as we're trying to engage the customer, is a problem of individualization, which means you need variety in options. And as you know, in big companies, be it financial services or insurance, right? It's the operational topic. A lot means many integrations, a lot of complexity, and thus you start hitting on operational limitations and dependencies very quickly. So no matter how active you are in the front about like, oh, we need to do this to the customer, this would be amazing, the problem comes back to deployment. And we just came off an event 2 weeks ago with like most of the German insurers, and we posed the question, what is more important to you, customer engagement or operational efficiency? And actually through the bench, it was really interesting to hear. Everybody has customer engagement as their priority, only to realize they have to first work on the operational side because they have no mechanism to deliver the customer engagement, the stuff critical for customer engagement. Now, to jump through this very quickly, you know, especially these two worlds, and this doesn't only count for payments, it also counts for many other tools you will have, is that world of tools, so be it payments or data analytics or ancillary services, and the enterprise, be it an insurer, the problem again is not choice. The problem is how do you connect these two to another? How do you deploy that in the organization? And there you will often find those two worlds move in a completely different kind of speed. Insurers, banks, you know, it's slow. It has its processes. People go on 4-week holidays, right? Legacy IT, it's not core competency, you know. For example, in payments, insurers don't build payment teams. And on the other side, the market is pumping new providers, new technologies, all new tech. It's just these two don't really fit together. So you have to pick your battles, right? And now, when we look at insurance, the way we break it down with our clients now is really around where do you make that difference? And the example I will show you here is just in payments, right? So this can be applied to many other industries, but specifically for payments, in insurance, you have 3 moments in a customer engagement where you have to decide between a real-time engagement or not real-time engagement. So to give you an example, the decision is step number 1. Am I collecting premium, yes or no? Am I paying out a claim, yes or no? So the insurer has to decide how real-time do I have to make that decision. You know, flight delay insurance, that's pretty much real-time because it's parametric. Life insurance is maybe not so real-time, the decision, because it's still, you have to investigate or disability claims, right? So how real-time can you make the decision? Then once you have made that decision, how quickly do you initiate a payment, right? So how quickly do you take action? And once you have done that, how quickly must the person have access to the money? Is it okay if he has it in 2 days, or does he have to have access to the money right now? So in each of them, it's like real-time yes, no questions. And you can really steer or impact these through the interfaces that you have with the client, analytics that you can drive, and automation that you can implement. So to give you a flavor for it, can you drill down what you offer to a client by customer segmentation? So am I offering Silver Surfers different payment options than the family group, right? So it might be the same product, same company, same location, everything. It's just for the grouping you need to offer the variety that impacts that. When it comes down to claims experience, you might, for example, lose your phone. You might claim the phone. How quickly does the insurer say yes or no? So for most of us, you want an answer pretty quickly, because it's not like, oh, I had some damage in the house, and I'll wait to hear from the insurer and then I'll go replace it. Most people can't survive more than a day without their phone. So they want to know right now. They want the payment to happen right now, and I want to go get a phone right now. So there, the experience should be about how do you get a phone into the hand of the customer, not how do I get money to the customer, which means how do you connect into the e-commerce space? How do you connect to that? And then when it comes to rewards, obviously it depends on where you are, whether something is valuable or not in terms of a voucher, right? So if you, for example, have payouts, it has to be relevant to your not only location, but possibly customer. And this is really where you have to start thinking about the feeling element, because I could offer, say, Amazon across Europe, or you might want to offer MediaMarkt. Yeah, you'll probably cover many markets, but is it as important in every market, even though it is there? It is really a big consideration to have if you really want to put the customer in the middle. The example I often give is in the travel insurance space. So imagine me and say our CFO Carl, we both live in Zurich, work in Zurich. Imagine he's on business in New York and he's on his way back to Zurich, and I'm on my way to New York. And we cross over the Atlantic, and then the next morning we arrive at the airports and both of our luggage pieces are gone. Now, when you look at that decision matrix, Carl, who has just arrived back home, he would like a decision. He would say, hey, I lost my luggage. But he's going home. He has a toothbrush, he has clothing. So the need to immediately pay and immediately have the payment available is not nearly as high for Carl or important. Whereas me, who's in New York, who have nothing, it's real time, real time, real time. And this kind of decision has to be at not even at product level, not even at customer profile level, but literally at event level, that you have to start thinking about offering these alternatives. And this is where you can already see that while many companies put customer experience right at the front, it is highly dependent on your operational capabilities. And people very often completely underinvest in the operational side to enable that. To give you some other examples, what's happening sort of in the industry now is that basically products being sold by others. So as you can see there, Revolut is starting to sell other people's insurance, right? So now as an insurer, you have to let go of your view of customer engagement. You are joining a completely different world. You are joining Revolut's world, and Revolut controls the customer experience. And they push that envelope very hard. So you have to start thinking about how do you build products so that you can not only drive your own customer engagement experience, but how can you sort of seamlessly fit into somebody else's so they can take your product and make it fit to their customer experience. Now that again is quite a complicated task, and it's very difficult for some companies to do, to let go of your product and let the experience around it be different, because it is in a different environment. You also have to start thinking about products not as a on-off switch, like it's bought or not bought. There is a journey to it. And it might sound obvious to say, but when you are in an organization and you speak to sales, you always have the customer value chain. Like, oh, people start doing research, people start asking questions. Everybody has that map. But when you really go down to the execution capability of the product, it is on or off, right? It's either bought or it's not bought. Those are the two states a product has. So while your engagement might be customer oriented, your product is not, right? And it's a small nuance that I think some people miss, in that when you see it, what other people are doing is that how do you make products part of the conversation? And a product can start having a state that exists between not bought and bought. You know, we have our CRMs and stuff, but you have to start making the product have a similar focus. For example, saving towards products. That means you have a product that is not yet paid for, but it is being paid for. So it is maturing in its status as being bought. You have people who are sort of having conversations about the product as they are asking questions. you can see the decision to buy becomes closer and closer, and thus adding elements of customer engagement in there that helps you capture and anchor these points will be critical. So can you anchor the point to say, okay, the person has broadly taken a buy decision, but now it's about color. And once they have fixed color, it's about shipping. Once it's about shipping, it's about ancillary products, right? So you have to have a different mindset on customer engagement that you bring into your product status, not just into your communication status. And the third bit is about just trying out new things. As you saw in the market, AXA offered people to pay for their policy in Bitcoin. Is it the future? Who knows? But you have to be able to try this out, because otherwise you're just going to have philosophical discussions, which often only make sense at scale. And I don't know how this will resonate with many of you, but as people will internally say, hey, why don't we offer, for example, let people pay for their policies in Bitcoin? Inevitably, there's some guy in the organization who's like, well, I don't think it's enough people, right? It's going to be like a $500,000 franc project to even deploy. So are enough people going to use it? Is it a gimmick? You know, it's personal opinions. Nobody actually knows what the customer is doing or not doing, because the aversion, because of the operational implications. Now, just to give you an example, AXA does not accept Bitcoin. AXA has nothing to do with Bitcoin. It has an exchange, right? Much like a payment company, that exchange accepts Bitcoin and it gives AXA fiat, so no more money. AXA itself gets no Bitcoins anywhere, so not possible. But they have found a way to partner with somebody to try it out, right? And I think this is, again, these important things to understand is how do you start not only think about customer engagement as a happy customer, but how do you start getting that feedback, not having philosophical discussions, and how do you start shaping your product to not have an on-off switch, but really have a customer engagement mindset into itself. Now, as we go back to those main topics that these customers have around transformation, modernization, digitalization, that's what everybody's working on. The problem is customer engagement, and as such actually payments, as is relevant to us, doesn't quite sit in an organization with a clear owner. Just to give you a high-level view, at a board level and an executive level, there are 4 main categories that companies consider. The most important topic in any board meeting is regulation. Are we compliant? Are there any problems, right? The second is the operational. Is the company running? Are we profitable? Is everything still going ahead or is going, right? Then comes growth. Are we doing enough to grow? Are we going to new markets? And only then comes innovation. So when things are starting to get hard, you start cutting from the bottom. First, you stop the innovation, then you stop the growth. You ultimately never stop operation and regulation. But if you look at customer engagement, the problem is it probably falls in at least 3 of those buckets: innovation, growth, and operation. You could probably argue even regulation. So the problem is there's no even one probable owner, even in a board meeting or an executive meeting. It's just always a topic. But the problem is that it's always there, but it doesn't have an owner. And as we know in an organization, that could be very, very problematic. So the question is in the organization is by thinking of customer engagement as more of a day-to-day piece, we see those who are very successful in customer engagement have that clearly sitting in the operational element, right? It never gets cut, even when stuff gets harder on innovation and growth. It sits and is owned on the operational level. And it's a bit of a mind shift because you think customer is all about shiny, cool stuff in the front. It's all about that it has to work, because even if you have shiny, cool stuff and it doesn't work, it's probably even worse. And I would argue that this applies equally to B2C as it does to B2B. So those B2B companies who have customer success sitting on the operational side are the ones that are most successful in the industry. Meaning, if you have customer success sitting in product, that's operations, right? If you have growth as more sales and innovation as special projects, if you have customer success sitting in those, you just don't see the same amount of success as with those who have it specifically in operations. Now, it really is a very great opportunity, customer experience, because it opens so much. But as we saw, it does have its challenges. We have to start thinking about products slightly differently, like less on off. We have to start challenging our academic conversations, like having philosophical and theoretical conversations. We have to be out there getting the actual feedback. And we have to focus on delivery, not ideation. Anybody can have an idea. The difference is in delivery. So as you are tackling sort of the customer experience side, it is a massive opportunity for the business, but you have to be brave, you have to be ambitious, and you have to be willing to enrich everything: operations, sales, innovation, everything. Now, that was sort of my 2 cents worth of what we have seen in customer engagement and how we are part of that ecosystem. And I would love to, open the floor also for some discussions and also get other people's opinions here.
Perfect. Thank you so much. All right. So if anybody has a question or would like to jump in, please feel free. This is your moment. All right.
Who will go first? You can break the ice, Gabby.
That's true. Yeah, for example, I think that it's key for any company to have that customer loyalty, right? So everything that you've said in this past 30 minutes, I think it's very important to have, in your mind when you're trying to get to that point where you have this loyalty and this customer engagement. So, for example, what would be something that, or what can be a solution when a team is trying to get that customer engagement? I mean, what would be something that you would like an advice, like, okay, remember to do this and this and that in order to get that customer engaged with your solution?
It's interesting that you sort of immediately went to customer loyalty, because it's something, I had to say I took more inspiration from the retail industry. So to build a loyal customer, you have to have an engaged customer, right? Purely having a good product no longer is enough, because marketing is so strong. Anybody can sell a good product. Whether it's true or not is a different topic. But just saying like, oh, those shoes are good, I love those shoes, or today not enough anymore, right? You have to have an engaged customer. So it's one of the big things. The second one is an advice I got when sort of from our no holds barred VC investors, right? So because you must remember, venture capital investors, they owe you nothing personally. So they are very open with their feedback and said, look, you as a founder go there, you're passionate about your idea, you think you're going to change the world. And he was very clear. He's like, look, Oliver, I mean, to be honest, your idea is not that special. You have to set yourself apart on delivery. There's probably 1,000 people at the same time having the same idea. You have to be better at delivering. And this is the one advice I would give people as they tackle these kind of topics within their companies, is that it always seems so overwhelming. One is that it seems like, oh, I will need resources, and they make too big a project out of it from the beginning. They seem to want to prove the entire business case at scale immediately. Just get started. Do the first thing. Launch a website. Get somebody on Fiverr. Spend $10 to get the basic logo and website in place, and put some links out on LinkedIn or do some advertising. Spend $100 and see if people click and who the people are. And that lets you take the next step. You can do that in a week and build up step by step. So that would be one of my big advice. Get started, get feedback. Don't let people in the organizations have theoretical and philosophical discussion, because it gets you nowhere. The second one is a bit of a, let's say, a weird kind of suggestion, is don't go for long-hanging fruits. It doesn't work. Why doesn't it work? Because it creates a false sense of speed in the project. People like going for low-hanging fruit. It's a very popular thing in big corporates. But the problem is you completely demotivate your team when you actually get to start to work on the real core problem. So the low-hanging fruit's like, oh, you can do this project. Within 3 months, you've done 2 things that the company thinks are big enough, but is purely cosmetic, because the next step requires 5 times as much effort, and the next step requires 10 times as much effort. And that completely demotivates the team who said, we were going at a rate of knots, and suddenly everything slows down. People lose interest in the project. People think it's a problem with the project. So combining those two, get started and don't go for long hanging fruit, is really get started on the main topics. Like, do you understand your customer? What do they respond to? Where is that channel? Don't talk to me about, I don't know, some weird kind of sideshow. Right? That would be sort of my main suggestion on that.
All right, thank you. And for example, for industries like the insurance sector and the finance sector, I mean, of course, this is something that everybody needs, right? And we take for granted a lot of the times. So as a customer, you think that it's something that you have to do, and it's something that it sometimes is kind of boring to do it, but you have to do it. So where is the fine line with the loyalty that I would feel that I'm engaged with the company that I'm, you know, a client of, or just like, well, this is something that I have to do, something that what is the fine line between getting a customer liking you, just, you know, having that loyalty towards you, instead of just being like, I have to do it because I have to, you know?
Yeah. So I think in insurance, I find insurance companies take on too much of that burden for themselves. It's very well known that people say insurance is sold and not bought. This is not a Generali or a, you know, Swiss Life or so problem. This is an insurance. It's the value proposition problem. And I always feel like insurance companies take this so personal. It's their personal mission to do this, right? That's the one thing I think to guard against. The second is loyalty. Again, who owns the customer? It's the big question, because they get to define what loyalty means. To give you an example, if you ask the actuaries around customer loyalty, they will calculate when your net asset value of your policy is its highest, and then you should get rid of the client, because anything after that destroys net asset value of the product. And that is the wrong, like if you put the actuaries in charge of loyalty, they will tell you after 7 years, get rid of the client, because then they are going to claim. So that's why I'm saying like loyalty could mean different things to many people. So an organization should just be clear as to who owns the client. And to answer your question as what does this mean for insurance? Like, where do you draw the line? It's, you don't want blind loyalty. You want loyal engagement, because I've seen the problem is that companies, because of their operational size, say they have the customer at the center, but what they mean is that they're segmenting the customer so that they can allocate their products and shove that down the customer's throats, even though they said, oh, we want to look at our customer on a lifetime basis. So the loyalty should be that I'm loyal to the, if you can create a loyalty that is loyalty to engage and have honest feedback and engagement, it will help you shape what the customer needs. And sometimes it's less, sometimes it's more. And that is still something that is culturally difficult for insurers to accept. They feel so mission driven by their product. It's like, what I have for you is right. Logic and value add. Right? How can you deny my logic? You have to have this. I have everything you need. And it's actually not so much about finding out what you need. It's just culturally difficult to even to let a customer say, actually, you need less cover now. It's just, it feels like money on the table. I don't have a specific answer. All I can suggest is maybe spend more time identifying who owns the customer. What you consider is that considered loyalty, like what does that part consider customer loyalty, and invest in that, in engagement. And some of it manifests in information, some of it manifests in action, and some of it manifests in products. There's no universal answer, unfortunately.
Great, thank you. Does anybody else have a question for Oliver and everything that we've been talking about? I see we have a very different group.
Gabriel, I'd like to ask a question from Stefan here. So I have two dimensions in my mind in the moment. So one is the digital maturity of a customer. How digital is he on the one side, and on the other side, I see, okay, how much data is necessary to work with the engagement issue you mentioned to us. So is it a lot of data? How granular should the data be? So this is a magic field to work in. And what is your experience about how much data and how much digitization should our customer have finally to do all these good ideas you mentioned to us?
So first I would like to talk about the data, right? So I think there's two kinds of data if you look at Europe and US. And for me, it's a data collection school of thought. The US is okay with collecting as much on you and sharing it with everybody else. You can buy data on customers. And in Europe, it's not. Customer has to give it to you. So you have to probably find the right balance between it. There's some publicly available data, but you have to accept that the most reliable data and most up-to-date data comes from the customer himself. So you have to be fostering an engagement that gives you a finger on the pulse. Otherwise, you might be making decisions on outdated data. And sometimes it might even be weird. Like you see this when you do shopping. Like I was shopping for like a tool set, like a drill set. 2 months later, I get adverts for this thing. I've already bought it. It's hyper annoying to keep seeing it. And at this point, it's going against it because they have bought outdated data, right? So as you are thinking about data, a focus should always be like, how am I getting the latest data? And then I would say the next step to consider is size of data. Often if you think about even applying for a policy, we ask everything. And then we grant the customer the privilege of buying our insurance product and being part, and then you pay. Whereas what you now see with other companies, they collect the absolute minimum, get them on board. It's like creating a LinkedIn profile. And then once they're a client, the customer gets to update the other information. So to give you an example, we were working with an insurer. So they asked the basic information, like record of advice, like, have you understood what you're buying, that we are selling you this? I need your address and I need your name and I need you to pay. That's it. Afterwards, they ask you ancillary health questions and like, what do you like more? Do you like hiking or swimming more? And if you ask these questions before, nobody would answer. It would be totally inappropriate. So it's also like, how much do you ask when, or do you go on an ongoing basis? So once we've addressed that, to say, I have created a culture of collecting more regularly, you can start asking the question about digital or not. Because customer, you can get that feedback from the advisor. Just, hey, ask the client this. And this is where digital starts transcending the channel. Do you have something digital for the advisor to say, are you asking this? Are you asking this? Have you thought about asking this? And then having a way of feeding it into a customer record. As a quick side note, we were working with Swiss Re on a product, sort of a research piece, where even for the digital natives on complex insurance products, even the digital natives, the very first time they buy that product, they prefer a human contact and feedback on that topic. Once they have done it once, they will only want to do it digital. But even that engagement has a non-digital component to it. So my advice here is also to not have only digital considerations and make sure that whatever data you collect actually is more than 50% given by the customer, not bought, so that it's on sort of up to date. And then the engagement that you try to build should be probably about 40% of the time confirming that this data is right, showing the customer that you understand them and care about their context, and applying that then to product. And this is what I was sort of alluding to. Loyalty is not using that data to shove as many products down the throat as possible, but using that data to show the client, I understand your situation. We have these things, and I really think only these two are important for you right now. Again, I don't have a definitive answer, but what we have seen is that, I would summarize it as get people to give data so it's timely, be open to collecting off digital as well as digital data, and then use digitalization to link it to a customer record, and then use analytics to map your customer onto your product, not your product set into your customer. So, and this is where we see more, and then like the size. Don't try to bombard the client, because the more you ask, the more creepy it seems and out of context, and the less they're willing to give. People get fatigue. And then, yeah, so that would be my high level views on experience.
Great insight. So thank you so much. So it was more than high level. I think it was a great insight about the magic field, as I mentioned. Great.
The actual magic that then comes out is, I mean, that's always, I'm surprised all the time what people find in their analytics. But that's why I think it's just a mentality piece. What are you mapping to what is, I think, really important.
Great. Thanks.
Okay.
Thank you, Stefan. So I have another question regarding the past year and a half that we've had. I think that a lot of companies are trying to get or change their strategies towards customer engagement because of the pandemic, and people are changing their mindsets as well. So because you mentioned the digital, how to get into the digital, I think, and this is something that a very personal opinion. Nowadays, I believe that people are, very tired of their screens. I mean, I think people are, trying to get that human contact again. So one of the things is, how would you, besides the digital world, reach out to people and try to engage them back into that digital, to continue to be in the digital platforms?
I'm not a big fan of like corporate like standard lingo, but the one thing I think that applies here is the Gartner hype curve. So I would start one step before. I don't know if everybody knows the Gartner hype curve, but you can map most technologies against. It starts super slow, then it wins in like excitement, it reaches a peak, everybody's talking about it, nobody's able to implement it, and then people become totally disillusioned with it, and it drops completely in sort of popularity, and only then do companies start figuring out its application, and then it starts creeping back up until it does like real transformational change in the world, right? AI is an example. I mean, think about like or even blockchain, even like a year ago, it was everywhere. You don't hear about it now. It's down that hype curve, and now it's starting to creep back in terms of actual projects. Now, what I wanted to say with that is taking that to customer engagement. Beforehand, companies spoke to customers because they had to, right? And they were selling them products, and customers were asking for different things, but the world is hard, operations is difficult, it's expensive. So companies always had a good excuse to not do this. Along came the pandemic and really forced people to completely change their behavior. They were at home, there was no out. So it was like a hard stop, and companies were forced to, and in some ways empowered to, like a lot of teams and big companies would always basically be stopped. Now they had a way to break through those gates. I just feel like they are so desperate to catch up. They are racing as this Gartner hype curve to deploy everything digital, missing the point that you might actually reach a point of saturation now. I've also read about this, that people are saying, I've had enough of my screen. So by the time the customer engagement changes, they might be going still for a year or two after that. And that comes back to what I was saying to Stefan earlier. Make sure you have the finger on the pulse, not buying data, because you will buy data that's a year old that tells you, I mean, just think about when people quote stuff. They'd be like, the McKinsey report from 2019 said, and then they base decisions on that today. There's no new McKinsey report from 2020 yet. So, and this is the problem. Like, how do you get that feedback from clients that they're craving the offline? I don't have an answer as to what that means for your product, but all I can say is that, as we're talking also about customer engagement, get more real-time feedback and not rely so heavily on reports, because you will be outdated. But both data is outdated data. So as you're trying to navigate these clients, give them a chance to say something, and then see what you can do. So I don't think there's a specific answer to say, hey, do this year and you'll be good, because I don't have that pulse on the clients at the moment. I just see companies are really trying to understand what that means. I don't know if we maybe read the same report, but how social media is like losing a lot of views, right? Just because people are bored, they've seen everything. Like, that's the bizarre thing. It's not even like people are on it so much, there's not enough content to actually keep people engaged.
And they're just not responding as quickly because there's so much content every day. I mean, every second you find yourself scrolling down without even looking or paying attention to what it's really saying. So it's hard.
And engagement has lost value, right? So this is the point. Like, people don't even like stuff anymore or share. They just scroll and look, like, oh, that's cool, but don't engage. And this is where I think customer experience and customer engagement is really important. Like, if they're not engaged,
Yeah.
You cannot build loyalty. You cannot build anything.
That's true. All right. So if you guys have more questions, you can also write them on the chat if you don't want to, speak up, but we can read it out loud for Oliver. So you can write it down on the chat and it's more than fine.
I have a question.
Go ahead. Hi.
Hi. So how do you think we could change like this a big corporation culture to go towards this customer engagement, not to this culture of building new products every day and trying to sell? How do we convince like the board to do this change? Because I think that for insurance companies, it's almost like we need to have like a lot of products. We need to try to sell them as much as we can, and they're more worried about that because of they're worried about income, other than respect a customer journey or respect this process of the customer engagement. How do we make this shift?
Good question.
Well, if I had the answer for that, I would be a millionaire. No, I think that for me, the most important thing, as it comes back to a tip I gave earlier, is you have to start acting more evidence-based. In big cultures, you have the tendency to only work on big projects, because if it's not a big project, it will not move the needle. And if it doesn't move the needle, it will not get time with the big guys, and it won't get the budget, right? It's like a size question. And I feel like in big organizations, if it's not big, it's not worth it. And this is where you have to think more tactically. As I said, try something, right? Launch a website and then go into the discussion and say, look, we had this. Okay, it will probably freak out comms and stuff like it, but so you have to navigate this. But we launched this, and within this short period of time, we got 200 clicks. This is the customer profile. So we believe already you have a better view of what to start building a different kind of next level business case on. And people are so, I would say, rushed. Like, how there's a nice saying in English that says, okay, hurry up and wait. So they will spend 2 months building a massive business case, only for it to grow up so big, because it has to move the needle, to enter the upper echelons of the corporate, who only meet on a quarterly basis. And then you go to a first board meeting, and for everybody in the board meeting to show their value to the company, they have to ask questions and ask you to come back. There's no realistic scenarios you're getting everything approved in one board meeting. So you're going to do a shitload of work for a month or two, and then wait 6 months with like a weird tweaking of the last 9%. And this is purely theoretical. You cannot stop it because you don't have evidence. They'll be like, well, I think the customer is this. I think it's that. And if you have no evidence, you cannot even stop it. So my suggestion is to change that culture. Is unfortunately a bit of a longer term game, but people, I would say, in the operational delivery side, product side, should move more evidence-based, launch smaller stuff, get evidence, move step. And this is actually what I personally feel is the fail fast, fail often mentality. It's not to fail. It is to get from A to B in many small steps as quickly as possible, so that there's no back from that step. So if you know this is your customer group, you can start building product. And if somebody says, well, I think the customer is different, you're like, no, shut up. It's this customer. We know it. It doesn't count. Move on. Next topic, right? And I think that will, from bottom up, create a different culture, that when the products have a specific size, they'll have more gravitas, that it will go through at the top easier because it's not so easily challenged. It'll also increase the quality of what actually gets to the top. That would be my theory.
Great, thank you so much for that question. It was really good. All right, okay, let's continue. We only have 10 more minutes, so if you have any other question for Oliver, this is your moment. Let's just see if anybody else have any other question. All right, no, I think, yeah, you've been.
Everybody has the answers. That's
yeah.
Good.
All right. So for us, I mean, it's been such a pleasure, just like always. So before we go, I would love to everybody, if that's all right to take a photo, and we can share the moment. If you would like to.
So we have to switch on the cameras.
Yeah, to switch on your cameras, and so I can just take a quick snap of all of you. Thank you so much for joining. It's been very insightful. So thank you, Oliver. All right, I see faces. Cool. All righty. Okay, so I'll just take a few. Okay, and 1, 2, and 3. I'll take another. Hold on. Hey, I see some familiar faces. Cool. And here we go. Thank you so much. It's been amazing.
Well, thanks for having me.
No,
thank
you, Oliver. It's been great. So just as a reminder, we do this every month. So we are opening up conversations on interesting topics about the insurtech world, the fintech world, because I think that everybody is very much interested in it. So I will leave all the links for Oliver's website, for our LinkedIn website, and our Meetup group, so you can follow us and be in the loop of everything that we're doing and all the events that are coming up very soon.
Great. Thank you very much. Have a nice weekend, everyone.
Thank you so much.
Thank you also.
Thank you.
Great insights. Bye.
Thank you.